how do you feel about the BlackRock ETF, or do you think that, at the end of the day, BlackRock's going to come and try to scoop up all the corn?
Definitely going to try and scoop up all the corn. I don't think it's going to get to a point where BlackRock is able to accumulate millions and millions of Bitcoin. I do think the free float of Bitcoin is a lot smaller than people expect it to be, which should send the price skyrocketing. That's basically my base case.
Which is the craziest rabbit hole that you've been sent down because of some guest that comes in and just starts spewing some fire out there?
I think Whitney definitely sends me down the darkest rabbit holes.
All right, I am back with another edition of the State of Bitcoin podcast, where I've got the man, the myth, the legend, Marty Bent. Interviewed so many different people, including Tucker Carlson, Whitney Webb, and many, many more. But I want to kind of dive into Tucker Carlson because he's been in the news a lot lately. He had Javier Milei on his podcast and everything like that. So, obviously mainstream media is kind of changing. Obviously, he's been completely on X now, or Twitter, whatever we want to call it. So tell us, did he give you any little tidbits when you met him? Were you able to, talk to him a little bit about Bitcoin? And I'll leave it at that.
No, unfortunately, I wasn't. So I was on his show back in February 2021 during the Canadian trucker protests that were happening up in Canada. It was right after the government sort of shut down the Coinbase wallets for individuals, froze their accounts. And he had me on to discuss the nature of that particular event, whether or not Bitcoin could be shut down or Bitcoin accounts could be shut down. So I had to, I think it was like a 2.5 minute spot where I was sitting in a production van in Florida, actually piping into where he was recording from. Just let him know, if you hold your Bitcoin on an exchange, they can certainly freeze your account. But if you hold Bitcoin in your own wallets, that is impossible to extremely hard. So it was literally the only face-to-face interaction I've ever had with them. It was cool. It was a cool experience going on his show. And I think what's happened to him over the last year has been very interesting to see. It seems that he is unplugged now that he's syndicating his own content from his Twitter account or his X account, referred to it these days. But I think he understands Bitcoin intuitively. That was I had a relationship with his producer. Whenever they would have Bitcoin questions, she would text me and I'd help them out. Just so happened on that day when I was on the show, I was answering some questions for her. She asked if I wanted to be on to discuss it with Tucker. So it was a really cool experience. And it's cool to see that he's running free right now outside the confines of Fox News.
Yeah, it's absolutely great stuff. So, obviously you've had, plenty of guests. You've been around the podcasting game for quite some time. Is there any, wild interview that kind of stands out to you? Anything that really, when you kind of look back, you're like, wow, I can't believe that this has happened, and kind of the journey that you've come on?
Being able to sit down with Jack Dorsey in person at Square's headquarters, 2019, that was really cool. Podcast was not even 2 years old at that point, so that was a really cool experience. Getting to talk to Jack before and after the show was pretty awesome and surreal. Definitely one of the highlights of the show over its first 6 years, and all the conversations with Whitney have been awesome. The Bellagio episode that we posted in the beginning of the summer, that was an unexpected marathon. I thought it was going to be 90 minutes, but turned into 4.5 hours, and I think that's definitely a show I'll remember for a long time. Bellagio, sort of dissecting the state of the world, drawing parallels between what's happening today and what's happened throughout history of the last 150 years, particularly. It's cool. It's one thing I love about the show. It just allows me to explore my own curiosities. So that's led me to people like Jack Dorsey, Bellagio, Whitney, a lot of people in the energy sector. Those are some of my favorite episodes. There's some Nas Al-Haji, Doomberg, Robert Bryce, exploring those areas, and the macro conversations. Well, people like Luke Groman are always awesome. That's one thing I feel very fortunate that the show has had the success that it has. I've been able to have all these different types of conversations, really smart and interesting people.
Yeah, it's great stuff. I mean, we've kind of even gone through, some of the other ones, right? I mean, like Dave Collum, obviously as well. I mean, you guys had some amazing guests on your show, but I guess, outside of I guess some moments that stands out, but which is the craziest rabbit hole that you've been sent down because of some guest that comes in and just starts spewing some fire out there?
I think Whitney definitely sends me down the darkest rabbit holes. But again, the energy stuff is a deep rabbit hole. I didn't understand how deep it was until I started recording more energy focused episodes in 2019 when I was at Great American Mining. We were dealing a lot with oil and gas producers, so I decided I needed to get a better understanding of what was going on in energy markets and started having a lot of people in the energy sector on the show. And I think energy is something that many humans, including myself, up until a few years ago, took for granted, and the complexity of how the world enables us to come in and do what we're doing right now, streaming over the internet, is extremely fascinating. And it's something I think more people should understand. It's a rabbit hole I've been falling down for 4.5 years now, and it doesn't seem like there's really an end to it, especially in today's day and age where many governments and climate hysterics seem to be very confused about what we need as a global society to actually succeed moving forward. It seems that there are many people who are willing to shoot ourselves in the heads at the altar of the climate crisis.
Yeah, I mean, it definitely seems like, it's an interesting dynamic that we have going on right now. It seems like it's a political battle in a sense. But, you've had Tom Luongo on your podcast a couple of times, and I know he talks about the intercobble squabble, I believe is how he kind of describes it. And so, do you think that the Fed and I guess the overall macro and, what Jerome Powell's doing by raising interest rates at such a historic rate, do you think that that's kind of like, I guess in a sense, like part of this, and the way that I guess Europe is coming back maybe not Europe necessarily, but like, how Russia and China and BRICS countries are kind of playing it is, all right, you're going to play us on the economic side of things. We'll play you on the energy side of things. Like, do you think that that's kind of, I guess, the war that's almost going on right now?
Yeah, I certainly think you have to put a material probability on it. I think Tom's thesis that the Fed is using their monetary policy to essentially cripple the European economy because the commercial bank interest here in the United States do not want to go along with what the European-centric sort of political power of the world wants to do, which is sort of the thesis of the World Economic Forum, which is you'll own nothing, you'll be happy by 2030. It's a very convincing thesis, and again, something you should definitely put a material probability on. Whether or not it's actually happening is yet to be seen. I don't think we'll ever know if that's the actual intention. But yeah, I think when you weaponize, that's the thing today around BRICS and Russia and all these countries. I think one thing is definitely for sure is that the geopolitical landscape is extremely volatile right now, and you have people making missteps all over the place. Whether it's Europe with their immigration policy and their energy policy, here in the United States with our monetary policy and weaponization of the dollar system. I think these factors, from Europe's perspective, putting themselves in a relatively weak position economically due to their energy policy mainly, and then the U.S. weaponizing the dollar sort of forced this volatility into the geopolitical landscape, where countries like Russia, China, Brazil, India are forced to sort of band together and say, hey, if they're going to weaponize the dollar, maybe we should figure out how to work outside of that system. But even with that being said, like I'm not confident that BRICS plus countries will be able to coordinate and get along together. In the long run, you have a bunch of competing interests and different sort of government structures within BRICS alone. And that's why Bitcoin exists. It gives you this apolitical monetary system to coordinate through. And that's what's leading to a lot of these issues is coordination problems, whether it's driven by political philosophy, energy, policy. It's just becoming abundantly clear, and that's getting harder and harder with 8 billion people on the planet and the world being flooded with debt for these countries to get along. The stress is just becoming so immense, and they can't trust each other, which is probably the biggest problem that exists today, is the lack of trust between these different international power players, whether it's here in the US, Europe, or BRICS countries.
I kind of want to dive into, I guess a little bit more of like, where you think that we're going from here, because, obviously the, Tom's thesis is, the intercarbonal squabble is great. And it seems to be essentially playing out. There's a lot of, that geopolitical tension, going on. But, at the end of the day, we're still going forward. And unfortunately, depending on who you ask, they think we're either having, a soft landing, hard landing, Great Depression. Like, it really, you hear it from all different angles. You've obviously interviewed a lot of great people and different guests, varying backgrounds and things like that. So, based on all of this, where do you kind of think we're going from here? Do you think we're going to, have a depression than the Great Depression? Do you think we're just going to have a soft landing? Obviously it's tough to predict, but I'm going to put you on the spot a little bit here. So yeah, I'll leave it up to you.
Yeah, I definitely don't think we're going to have a soft landing. Whether or not we have a prolonged depression or a less prolonged recession, I guess is the question. And it seems like the powers that be are getting desperate. We're seeing just like very prototypical state reactions to the loss of control globally. Again, with going back to the debt and inflation, particularly when these things get out of hand, people get stressed out, they get angry, and they begin to lash out. And when the plebs, the citizens, begin to lash out, the governments typically begin to lay blame on capitalists. We're seeing that in Canada. Last week with Trudeau coming out and blaming grocery stores for inflation after he expanded the Canadian dollar monetary base by 3x over the last 3 years. We're seeing it here in the United States with all the strikes that are going on right now. There's a particular part of the government that is blaming greedy car manufacturers for not paying their customers a lot. And again, it's not a good situation with interest rates where they are. It's becoming extremely expensive for corporations to service their debt. We're seeing the highest corporate bankruptcy rates that we've seen since 2007. And they only seem to be increasing from here. And so I think the question of like a soft landing is completely out the door. I think that's becoming glaringly obvious right now as we have interest rates at the highest levels they've been in well over a decade, and inflation. Last month, inflation increased from 3.2 to 3.7%. It's moving on a higher base, and I don't think the Fed has tamed inflation by any means. We're seeing the price of a barrel of oil go up above $90 now, and that's a fundamental input for the whole economy. So that will lead to higher prices throughout all goods eventually. So I think the Fed and the U.S. economy, the global economy at large, is in a very precarious situation where the whole reason that the Fed went on this aggressive interest rate hike run here over the last 2 years was to tame inflation. It doesn't seem like they did that successfully. Now we're in the situation where we're having a bunch of bankruptcies, and there's definitely a bunch of credit crises that loom. Some of them may be more isolated than others, but it seems like the Fed is setting itself up to have to step in, lower interest rates, and print more money at some point in the next 12 months. And if they haven't actually solved the inflation problem before they're forced to revert course on their interest rate policy, I think that's just going to be a terrible situation. I think when you talk about like
topic of hyperinflation is definitely a bit touchy for people, but it's two parts. It's mechanical, how much the monetary base expand by over any period of time. But then it's psychological. I think what the Fed is doing right now is potentially setting us up for that psychological tipping point moment where if they went on this aggressive rate hikes, created all these credit crises, led to all these bankruptcies, led to all this job loss and all this, and at the end of the day, they actually didn't solve inflation. I think at some point within the next 12 months, if they revert course and none of that is solved, people are going to begin questioning the validity of the Fed and whether or not it can actually properly manage monetary policy and stick to its mandates of full employment and price stability. I mean, we're entering a territory where it's going to be blatantly obvious that they have no ability to control either, which is really bad for the Fed particularly. And then since the US dollar is reserve currency of the world, I mean, that presents systemic risk for the global economy. And yeah, it's like hard to tell where the signal is and if there is actually any relative strength across any of the economies globally. I mean, it seems like China is having some economic turbulent times as we speak right now. It seems like their real estate market is imploding. People are beginning to get very angry over there. Sanctions, whether people want to admit it or not, have definitely hurt Russia in some regards. And Europe, again, Germany, which is the economic powerhouse of Europe, is completely decimated right now. They've had a lot of their manufacturing base move out of the country because of high electricity prices. And again, they're doubling down on their ignorant energy policy. And so, yeah, I think long story short, I think we're in for some pretty volatile times. And then you layer on the social stress that exists all over the world. People are very angry. People are reaching the end of their careers and beginning to realize that they're not going to be able to retire. And if they are, not as comfortably as they may have thought just a few years ago. You rug pull people at that scale. Who knows what that leads to socially, whether there's increased levels of social unrest. I think that's certainly going to happen. I guess the question is, I hope to God that it's sort of contained to a manageable level, but I don't think we can rule out the possibility of it getting pretty crazy and very volatile. And I think seeing the war drums for World War III begin to get louder and louder is a sign of that. Typically when countries lose control, they try to send their citizens to war. It seems like a lot of the kleptocratic politicians here in the US and in Europe are gearing up to send people to war to distract them from all this. And that would just be terrible. That would just pour jet fuel on the fire, which is something that nobody should want. We're hoping cooler heads prevail, but I don't think the politicians that we're stuck with right now have the ability to properly manage this. So I think there will be a lot of volatility. I guess the question is, how quickly can we get to the masses and educate them like, hey, all these politicians, all these governments, all these central banks are the ones that are causing the problem. It's not the individual citizens. At the end of the day, there's something structurally wrong with our global economy, and it's the way money is created, and the way central planners try to granularly manipulate everything we do in our everyday lives, whether it's how much hydrocarbons we're allowed to consume or how much food, how much meat we're allowed to buy. I think that's one thing I really hope is if it does get, when it does get to the point of extreme volatility, that people don't look to politicians and central banks to solve the problems that come around. I think people need to employ some introspection and ask some really hard questions of like what is really actually driving these systemic issues that are making everybody's life worse off.
But Marty, CPI is at 3.6, where it's coming down, right? I mean, inflation's under wraps, right? I mean, obviously that's tongue in cheek, but I think like a big part of it is, as the Fed and Jerome Powell has kind of been talking about, battling inflation and everything like that. he's mentioning some of the data points that he's looking at, and as far as like unemployment goes, and some of the job numbers and things like that, it seems like all of the data that we're using right now is just, it's terrible. It's survey based. The response rate previously was around 60-70% pre-email, where it was kind of your civic duty to reply to some of these census data. But now it seems like we're all kind of I guess grasping at straws. So do you think that I guess essentially like some of the data that we're using to, I guess, kind of, or the Fed's using to make some of these decisions is almost like, I mean, obviously CPI is manipulated, but it seems like all the other data points are pretty easily manipulated to kind of help fit their narrative of some of the strings that they want to pull. So in a sense, do you, I guess, like, how reliable do you feel that a lot of this data that the Fed is basing their decisions off of is?
Not reliable at all. It's all fake. It's all fake data used to massage a narrative. I mean, we do have evidence of this with revisions, particularly to jobs reports throughout this year. I think every single jobs report by the second revision has been lower than what was originally reported. And so they're artificially trying to pump up the employment numbers. People only read the headlines of the months that they're released, and very few people actually go back and look at the revisions that they're released many months later. And if you actually look at the revisions, the job market has been pretty terrible if you're using revisions as the gauge of actual growth on the labor side of the economy. So yeah, I think all the data is manipulated, and you just have to follow the incentives again with where the debt is and where inflation is. The only thing that these governments and central banks can fall back on to sort of keep the peace is narratives, and they can manipulate data to portray a certain narrative that will lull people to a false sense of security, even though they intuitively understand that things have gone terribly awry. They see it every week at the gas pump, at the grocery store, when they're trying to buy a house. It's blatantly obvious that the data that the Fed and the government are putting out there in regards to economic data just does not compute with the reality that we're all living through.
Yeah, I mean, and I definitely agree with you. I think the data is all manipulated in a sense, but I kind of want to get back to, the World War III type of narrative that you brought up, because it seems like the fiat world that we live in essentially, incentivizes crisis, right? I mean, whether it's, the jab and kind of like, essentially, pumping money into the big pharma, or war, where it's pumping money into big defense companies, somebody always seems to benefit out of these crises. And so, obviously the fiat world that we live in is kind of, crumbling as it seems, right? I mean, we've had Powell come out and say there's room for multiple global reserve currencies, kind of prepping us for this going forward. But, I guess, how do you see this transition going, right? I mean, you brought up World War III. Do you think that we're going to kind of get there? And then, I guess, how do we come out of that? Because in a sense, I see things going either one of two ways. Either there's I guess a big bloody crash, and then we somehow end up into like some sort of a Bitcoin standard, or it's a long drawn out period where things aren't necessarily great, but they're not necessarily, I guess, bad. It's kind of like a prolonged stagflation, and there's some sort of transition period in between, I guess the dollar in a sense, and maybe like a Bitcoin standard where we have, I don't know, maybe a dollar backed by some hard assets, maybe even Bitcoin or something like that in between, kind of moving to, I guess, a hard money world.
Yeah. Again, I don't know exactly where things are going to go. And so I think it's just having a few different scenarios in your mind and preparing for each of them individually. So like hope for the best and prepare for the worst. And I guess we'll start with the worst and we'll end with a more positive note. But yeah, the worst is that these governments are successfully pushing us into World War III. The U.S. and NATO's very keen on really continuing their antagonistic tactics with Russia, and sort of bringing the world to a world war. I mean, we're seeing a lot of coups in Africa. I mean, who knows, maybe in retrospect, a decade, 2 decades from now, people will look back
essentially say that Russia invading Ukraine was actually the start of World War III. We may already be in it. And I guess the hope is that it just doesn't escalate to a nuclear war, because that would be terrible for everyone living on the planet. So that's the pessimistic path we could take, and probably the worst that people should prepare for is a world war in which the draft comes back and conscription comes back, and politicians, the world, use citizens like you and me as cannon fodder, so that they can delay any responsibility or accountability for the problems they've created. The optimistic view and hoping for the best would be that I think we've seen, particularly throughout the last 15 years, that digital age is a double-edged sword. It can certainly sow a lot of strife and a lot of division, but can also be a powerful tool to push back against the warmongers. I think in 2012, during the Syrian war, when John Kerry was trying to convince people that Syria was using chemical weapons, was trying to push us into war in the Middle East, people sort of got on social media and said, no way, this isn't happening. So optimistically, I think, especially coming off the heels of COVID, the lockdowns, the mandates, the vaccines, that have been a terrible failure. There's more and more people who are fed up with politicians and how they're trying to essentially control us. So I do think we always have that in our back pocket, which is the hope that there's enough people who are aware, paying attention, and brave enough to speak up on social media and then meet space to say, whoa, we're not going to do this. Like, you can try to bring the draft back and try to conscript people to go fight your world war, but we're not going to do it. And then also something you said, which is probably in line with the optimistic, like prepare for the best, is that the economic turmoil just gets dragged out longer than many people expect. Credit crises are able to be relatively contained within their individual sectors. The Fed and the federal government are able to kick the can down the road a bit further by lowering interest rates and printing more money, while at the same time more and more people are adopting Bitcoin. And even though they're completely debasing the money, putting us into more and more debt, there's more and more people getting access to sound money and adopting Bitcoin standards at an individual level that can lessen the blow down the road. But yeah, I guess you have to prepare for both scenarios: full-blown World War III, where everything's dragged into the mud, the money printers get turned on blast immediately, and things get chaotic for many years. And then the optimistic path, which is still not a great path, is things get drawn out. People stand up and speak out and say, hey, we're not going to World War III for all of you corrupt politicians.
Yeah, no, 100%. And yeah, I mean, there's obviously those two different things, and it's very tough to predict. But obviously, you know, when it comes to all this, Bitcoin doesn't care, right? I mean, that's kind of the mantra. So, you know, you've been in this space for a while. You've had a podcast on Bitcoin, you know, for quite some time. You've been able to meet a lot of people. You know, we're kind of in an interesting bear market right now where, you know, it seems like it might be tough economic times, you know, come the halving next year, which will be kind of the first scenario. And obviously we've seen the Bitcoin hash rate increase during a bear market for the first time, I think, since Bitcoin's, you know, inception. So, you know, in general, like, kind of where do you see where we're at in the Bitcoin space right now? And like, is there something that I guess like leaves you like really optimistic going forward, whether it's, you know, some certain company aspect building or, you know, Bitcoin adoption in countries? Like, where do you kind of see, I guess, the greener pastures on the other side?
Yeah, it's been a long bear market, but the cliche is true. Building happens in the bear market. And from a fundamental perspective, with Bitcoin, I couldn't be more bullish than I've ever been. I think there's many factors that are coalescing at the same time right now. You mentioned mining. I think the energy sector is becoming very aware of how mining can fit into their operational stack and benefit their businesses, their
efficiencies as businesses. And I think that trend is only getting stronger. And I think those in the energy sector who get it are able to sort of block out the noise and they see the signal. And so they'll be really integrating with the Bitcoin mining industry more and more moving forward. They have really made big moves during this bear market, which has been good to see, whether it's here on the grid in Texas. We've seen a lot of activity. Tennessee Valley Authority up in Appalachia, other countries like Kingdom of Bhutan getting in, Oman investing $1.1 billion in a miner to leverage their natural resources to mine Bitcoin. So I think the mining and energy sector convergence is something that's been happening in the background during this bear market. That's really bullish long term once you get the energy sector bought into Bitcoin and how it can help them. That's a very strong ally to have moving forward. And then on top of that, a couple other themes that are really beginning to take form is the maturation of the Lightning Network for 5.5 years into the Lightning Network being a thing launched in March of 2018. And even though it's not in its final form yet, a lot of valuable work has been done over the last 5 years. So we have very robust implementation, competition. There's a lot of development libraries that are robust and make it easier for people to build applications on. You have a bunch of Lightning service providers that have really matured over the last couple of years, whether it's Voltage, Strike, River, Amboss. I think seeing Lightspark and David Marcus come into the space has been a good validation. Lightning's not, again, in its final form, but I think the progress that's been made has been material. We'll see the benefits of that on the other side of this bear market. Bitcoin as super collateral within credit products. I think that's something that many people aren't aware of that's going on behind the scenes, but I think many people in traditional credit are beginning to understand how Bitcoin can sort of be blended into their credit products due to its profile as a scarce asset that is extremely liquid. So that adds a good collateral aspect to a lot of the credit products that are out there and that Bitcoin can be implemented into. And so, yeah, like coming out the other side of this bear market, I think the fundamentals, whether it's mining sector, Lightning, Bitcoin financial applications, it's the fundamentals have never been better. From those three regards specifically, there's much more that's been going on that just adds to my bullishness. The fundamentals are better than they ever have been, and I think they're only going to continue to get better. And then another thing that's actually an interesting externality of this high interest rate policy is I think a lot of the companies in the space is something where you'd experience a 1031 with the higher cost of capital. It's forced all the companies building in the space to think deeply about how they actually manage their balance sheets, their burn rates, what they decide to invest in, how many people they hire. And so, even though it sucks that it's a bear market and then we got this high interest rate environment, I think there's a lot of hard lessons being learned, good lessons that'll pay dividends in the future. So I think what we're seeing in this environment is a lot of companies in the industry become much more conservative and really try to leverage all the talent and capital they have to go the furthest they can without having to add headcounts or OpEx, and just run as lean as possible, which I think will benefit the industry massively moving forward. It sucks a bit now, but I think a year into the FTX blow up of last year, all the fallout from that, I think the dust has settled and people are really honed in on how they're building their companies, how they're building their products, and how they're managing the balance sheets, which is actually a very good positive externality of these bear markets.
Yeah, and I mean that is an interesting point you brought up, and you stole my thunder a little bit because that's where I wanted to go next. It was more about the Bitcoin companies and kind of the overall like state of where they're going. So it's kind of, I guess, a two-part question I have for you here is like, obviously money's getting tighter, right? I mean, it's harder to get, whether it's venture capital funding, bank loans, it's harder to fund some of these businesses. So, as you've lined out already, they're trimming a lot of fat. But, in a sense, do you think that's kind of I guess, slowed the growth of, potential for, I guess companies in the Bitcoin space in general, because, it seems like there's, I guess a tough narrative because, outside of, Bitcoin only VCs like 1031 and, Lightning Ventures and some of these other ones, it seems like, a lot of other venture capitalists are probably going to be gun shy, at least from my perspective, when it comes to Bitcoin companies because of what we've seen, in I'll call it the crypto fallout of like FTX and some of these other companies have maybe left a bad taste in some of these, I guess, general venture capitalist mouths. So, with that being said, do you think, like, I guess the growth has been, I guess, stunted for some Bitcoin companies, and that we almost like, I guess, need a little bit of a bull run in order to I guess, help prop up some things like, the Lightning Network, get some more developers in there, get some people funded and other things like that?
No, I think there's a couple things on this particular subject. One, I think a lot of companies raise money at a good time in 2021 and early 2022 before things got really bad. And so a lot of companies have pretty robust balance sheets. As things were starting to break down in 2021, after a lot of people raised a bunch of money, they began to slow hiring and really sort of see what was going on the horizon and say, all right, maybe we should be more conservative. And then number two, I think you look at just the metrics of a lot of these companies. I mean, River posts publicly, like their Lightning services is seeing the most activity that it ever has in the middle of this bear market. They're adding clients pretty consistently. I mean, Unchained raised a big round led by Valor Capital earlier this year in the middle of the bear market. So I think that is one thing that we've seen at the institutional level at 1031 is that there has been a clear delineation between Bitcoin and crypto that is beginning to form in not every investor's mind, but there's certainly people who are getting the signal like, oh, the FTXs, the BlockFi's, the Celsiuses of the world were doing it wrong. There are people who are doing it right. There is signal in Bitcoin. Bitcoin does have validity to it. We just have to find the companies that are building the correct products and doing it the right way. So there definitely are companies that are struggling, and it is very hard time to raise money for them. The ones that are clearly building products that will last for a long time. I think there is a particular type of institutional investor that's able to see that signal and really block out the noise and employing the strategy that everybody hears about growing up and very few actually deploying, which is when there's blood in the water. When there's blood in the streets, you should be going in. And so we've definitely seen more people looking at the top tier blue chip companies in the space. And then on top of that, I do think things like BlackRock and other institutional investors signaling that they want to get into Bitcoin has created somewhat of a herd mentality at the institutional level where people aren't afraid of Bitcoin and Bitcoin companies. They're just trying to discern whether they're getting involved with an FTX or somebody like an Unchained or River. It's definitely not the easiest time to raise, but again, I think there are a lot of high caliber companies in the space that raised at very fortunate times. And luckily, quickly after they raised, things sort of went to shit and they were forced to get conservative pretty quickly. There are certainly companies in the space that are hurting, trying to get off the ground and raise some capital. And there are still deals being done, but obviously not as many as there were in 2021 and early 2022. Excuse me. But yeah, no, I think the industry is in a good spot. And I guess, the question is how long are we going to be in this bear market? There's certainly some that can survive for another year or 2 years, but if it gets much longer than that, it could get bad. But I don't think it's going to go that long.
Yeah, I mean, it'll be an interesting year as it all plays out, right? With the halving and everything like that coming up here in May of next year or so. I mean, I think that when it comes down to it, it's going to be kind of an interesting overall macro environment. But do you see, I guess, any gaps in some of these development of Bitcoin companies? Because I feel like a lot of, the startups that I interact with, it's a lot of like first-time founders that are very, gung-ho about Bitcoin. They found some sort of gap in the market and they're kind of going at it from that aspect of things. And, because of that, they're, I guess learning on the job, so to speak, of how to raise some or how to run a company. And then not only that, run a Bitcoin company, which has to deal with, more volatility than maybe some traditional type of, I guess, fiat company. So in that sense, like, do you think, I guess a lot of founders are kind of learning some valuable lessons throughout this? And, is there any gaps that you're seeing when it comes to not only just like, I guess founders, but maybe even like company wide missing products, missing aspects of things?
No, I mean, yes, I think founders are definitely learning a lot of hard lessons, especially if they're first-time founders. But I think the benefit of being a founder within the Bitcoin space, you sort of find Bitcoin first and you understand the volatility that comes with the asset and are somewhat mentally prepared going into it. Not every founder, but a lot of founders sort of internalized Bitcoin's historical volatility, are aware of it, and do plan accordingly. There's definitely other founders who YOLO'd into situations that are going to be hard to get out of. But yeah, I think that's one thing we try to do at 1031 is just leverage our experience as partners and the experience of people within our network to get them the resources they need to be as successful as possible to scale their companies, build out their products. That's, again, one thing about the bear market is there's a lot less distraction, so it's a lot easier to really focus it, build out a roadmap to begin executing on. That's one thing we've certainly seen within our portfolio companies at 1031 is that a lot of people are really have really figured out their roadmaps and are executing on building out those products, preparing for the bear market, because that's the name of the game in the Bitcoin industry. For building a company, it's in the bear market, prepare for the next bull market and being able to take on that wave of new users and new activity. I think one problem that is still lingering that many companies have gotten wiser to, but it's still a problem. It could be an ongoing problem, just banking relationships due to BlockFi, Celsius, FTX. A lot of the banks in the US particularly sort of stay away from anything related to crypto, unfortunately, including Bitcoin companies. And that's one thing we've been doing a lot on the 1031 side, is sort of advising and helping founders and companies navigate the banking relationships. And so I think what we see over the last year is that a lot of these companies have many banking relationships and they've built redundancy on the fiat side of things to make sure that they're not exposed to the trusted third party issues with the banking system. It's good to see Custodia go live, and obviously they're going to be catering to Bitcoin companies, so I think we'll see a lot more people begin to bank with them. But yeah, that's probably still going to be a problem, particularly if the regulatory environment continues to get more the regulators continue to scrutinize what's going on in crypto. Like it or hate it, Bitcoin gets lumped in with crypto, and we're going to have to deal with any blowback that comes from the regulation side of things.
Yeah, for sure. But yeah, I mean, you brought up BlackRock a little bit earlier, and I kind of want to dive into that here as well, because, you brought up BlackRock obviously wanting to get into Bitcoin. They're talking about their ETF, and obviously a bunch of others have followed suit. We saw BlackRock scoop up a lot of commercial real estate downtown, I'm sure, in downtown in a lot of cities. I'm sure they're going to continue to do that as, commercial real estate is hurting now, and, those mom and pop investors are potentially going to have to sell. But I guess, in a sense, how do you feel about the BlackRock ETF, like BlackRock kind of coming into the Bitcoin space? And I guess I'll just leave it at that. Like, is it beneficial for regulatory kind of stuff? Or do you think that, at the end of the day, BlackRock's going to come and try to scoop up all the corn?
Definitely going to try and scoop up all the corn. And I think that's the beautiful thing about the situation. I think it's 19.4 or 19.6 million Bitcoin have already been distributed to the market. The number of Bitcoin that's flooding off exchanges is at all-time highs. The number of Bitcoin on exchanges
is at relative lows. So I think what we're seeing, you can see this on the chain data, the long-term hodlers are becoming more and more emboldened in the fact that Bitcoin's going to succeed. They're not selling their Bitcoin. They're holding it off exchanges and wallets that they control, which is great to see. And then BlackRock entering the market, again, like it or hate it, it is the reality that there are a large number of investors who look for BlackRock's stamp of approval before they enter into a particular asset. There is also a large pool of investors who are not comfortable with holding their own keys, would gladly hand over that job to BlackRock and Coinbase. And so I think the ETF will have a lot of success, whether or not they'll be able to accumulate a material, let's say 5 to 10% of Bitcoin is yet to be seen. I'd be highly skeptical of their ability to do that, which is very bullish for anybody who's holding Bitcoin. Because I do think that trend of hodlers understanding the asset that they're holding and its long-term potential is not going to go away. Yes, there will be some that carve some profits off as the price runs, but I don't think it's going to get to a point where BlackRock is able to accumulate millions and millions of Bitcoin. I do think they're going to acquire a lot of Bitcoin. They're going to find that the free float of Bitcoin is a lot smaller than people expect it to be, which should send the price skyrocketing. That's basically my base case, is that we're lucky that Satoshi designed the supply schedule the way he did, and that 91% or 90% of Bitcoin that will ever exist has already been distributed to the market. And it's mainly being held by hardcore hodlers who intuitively understand the value prop of Bitcoin and its long-term potential. So I think BlackRock's going to be fighting over the last 5 to 10% of Bitcoin with individual investors and other institutions. So yeah, I mean, I don't recommend that anybody get exposure via the ETF. I don't think that you're actually going to be able to get your Bitcoin in kind as easily as they market. And I do think you're going to want to actually hold Bitcoin in the future, particularly 5 to 10 years from now, due to all the utility that the network and the layers being built on top of it will provide you. So yeah, I think the ETF will have success. It'll be hard for them to get Bitcoin, which will drive the price higher. But I do think I don't see many hodlers dumping their coins to buy ETF shares.
Yeah, I agree with you 100%. And yeah, I mean, I wouldn't recommend giving BlackRock any money to purchase Bitcoin either, because yeah, I don't think that's the best plan of action, right? I mean, holding your own keys, the decentralization aspect. I mean, the list goes on and on as to why you should hold the Bitcoin for yourself. But before I let you go, I have to bring up Barstool. I mean, that's how I first heard of you, Bitcoin Marty, back in the day. Obviously, they've been in the news a little bit here lately for a positive thing. I think that Dave Portnoy, for those who don't know, the founder, bought back Barstool for a whole whopping $1 after selling it for about $551 million. So, I guess 2 questions for you. Like, how do you think Barstool would be, receptive of you now opposed to when you first started? Because Bitcoin has changed quite a bit. And what do you take of, this whole deal that Portnoy buying back Barstool Sports?
No, I'm very happy for Dave. I think, the company is much better off than the 100% owner. I'm very happy that he was able to get his payday when Penn bought them. But essentially when they were under Penn's umbrella, they were a marketing arm. That was a loss leader for Penn. And so they were losing a shit ton of money as a company. And then on top of that, it diluted their brand because they weren't able to be as brash and they had to self-censor quite a bit with Penn being their parent company. So now that Dave has full control of the company, again, I mean, they've had to make hard decisions in recent months to lay off a bunch of people to get their costs in line with their revenues, which I think is a very smart business decision. I'd like to see Barstool around for a long time. And I think Dave, Dan, and Kevin do as well, and they're making the moves to ensure that happens. And I do think the content has gotten better since Dave bought the company back. They're not self-censoring as much as they were when they were under the Penn umbrella, which is great. That's what their bread and butter is, making people laugh and making edgy content that people use to escape the craziness of this world that we were describing earlier. And then, yeah, like I think they get Bitcoin to a certain degree. I mean, I still talk to a few of the Barstool guys. I'm really good friends with Caleb. He's pretty bought into the Bitcoin stuff. And so whenever he has a question, he hits me up and we talk about it for a while. Yeah, no, I think I've been back Barstool a couple of times since I left. I've gotten lunch with Dave once in Miami at one of the Bitcoin conferences. Still a friend of the show, I guess you could say. Definitely cheering for them to succeed moving forward. Won't be surprised if our paths cross at some point in the future, especially if the Bitcoin price runs. I'm always curious what Bitcoin Marty thinks when things begin to heat up.
Yeah, exactly, right. I mean, you're the Bitcoin spokesperson of Barstool Sports. I mean, anytime that the price is ripping and rolling, that's when all the normies and they get the eyeballs on it. But Marty, you've been very generous with your time, so I really appreciate you coming on. So before I let you go, I gotta know, is there anything big coming up for the rest of the year? Right, we're recording this like early September or mid September, so you got any big plans for the rest of the year that you want to, I guess, get some eyes on? And yeah.
So we got some big changes coming to TFTC, the website particularly, that I'm excited about, which should be live in a couple of weeks. I hope that it's well received by Bitcoiners. We're really going to try to lean into the Trojan horse aspect of the brand and expand what we're doing on the content side of things in a unique way that leverages the Lightning Network particularly. So really looking forward to that. So that should be live in 2 weeks at the latest TM. But yeah, I'm excited for that and hope that it allows us to go to the next level on the content side of things to really begin to Trojan horse this idea of sound money and freedom in the digital age into more and more people's minds.
Awesome stuff. Well, Marty, thanks so much for coming on the show, man. I really appreciate it.
Thank you, Brian. It was great.
Thanks so much for tuning in, everybody. That was a great episode about all the rabbit holes Marty Bent has been down. If you want to get into more rabbit holes, check out the interview I had with Caitlin Long. You can click the link right here. And if you found some alpha in this recording, hit that like button, hit that subscribe button, help your boy out, help me get to 1K subscribers. All right, I'll see you at the next one.